Welcome back to the 15-minute study break podcast when the study break never actually lasts 15 minutes. I'm today's host, Jack, and I'm joined by.
My name is Ivan.
Is it?
Today we'll be diving into cryptocurrency and stablecoins, how they've risen over the past 6 months, and where the future holds for these groundbreaking technologies. So I'm sure you guys know a lot about like cryptocurrency. It's been around for quite a while. Been around since like I think the 20 times or maybe even 2009. That's when it was around, and it's crazy. I think I heard about like a pizza transaction made with Bitcoins, and just thinking about how much that's worth now, it's pretty mind-blowing. But I think it's definitely gained a lot more relevance over the past 6 months, and I got some stats to kind of like back it up. So institutional crypto allocations in big firms. BlackRock is one of them. ARK Invest is another one that holds a lot of Bitcoin ETFs and has also generated Ethereum ETF that I actually invest in. Those allocations have increased by 87% over the last 6 months. And also 83% of institutional investors are also planning to increase their crypto holdings. And also over the past 6 months, maybe I would probably even say over the past 2 months, Bitcoin actually reached their new all-time high, topping more than 111,000, and it is currently up 16% year to date. And actually, interestingly, many people have Bitcoin's price target for the end of year 2025 at anything between 170,000 and 300,000. And that is, of course, if the current trend with the bull market continues. And I think that's like really interesting. And of course, we all have very different takes about like crypto. So maybe we could potentially talk about like maybe some why are some of the reasons that crypto have surged over the past 6 months. So I guess like my first question for you guys is like, what is your take on cryptocurrencies and what is your like perspective on how they've grown over the past 6 months?
I'll take it first, Ivan. My perspective is I'm pretty cautious of it. I think that cryptocurrencies, they're not really, I don't know, it's like trading a commodity. It's a fixed supply, right? To an extent. Like you can mine Bitcoin and whatnot, but it's almost full, like it's almost dried up in terms of that. And it seems like it's just you're basing it on like if someone trades it at this level, people are like, "Oh, it's going up," and then they'll buy a bunch, and then it shoots the price up, and then they'll sell a bunch. I don't know. There's nothing that's. It's not like an actual company that has some sort of backing, like value drivers, in my opinion, that are actually like stable and whatnot. Um, as for the reason that it's grown in the past 6 months, you can kind of think about the presidency. Trump is like he's very pro crypto, so that's one of the reasons it's driven so high. But yeah, I'm pretty cautious of cryptocurrency in general.
I would say I agree with Zach completely. Like crypto is like we're gonna talk about stablecoin, but crypto is inherently unbased. Like there's really no reason for you to want cryptocurrency because you can't. It's not literally not worth anything. You can't exchange it for anything. It's only based on the fact that people want crypto for the sake of wanting crypto. It's not like I like stablecoins. Like I can have a stable coin, but I can immediately switch it back into cash on hand, which has value because everyone uses cash, but not everyone uses stable coin or crypto, right? So I think based on that fact, it's like so many cryptocurrencies. The top of my head is like the Dogecoin and stuff like that. Like it's just inherently based on people hyping it up because it's a joke or a meme or whatever, and then people buying it simply because it's a joke. Like I thought it was a joke and I bought exactly $1 worth of Dogecoin when it first came out, and I think I lost like 90% of that, 90% of my dollar. Um, but like it's inherently a joke, and I don't think you should invest in a joke, right? And then additionally, like as Zach said, Bitcoin is drying up. Like they have like 23 million hard cap. Right now we're like 21 million or something. And then like they're making it harder and harder every couple months or so to mine Bitcoin. So every time you finish a task, you only get half the reward. So you gotta do like double the task to get the same reward as a few couple weeks ago. So you're making it harder to reach that, to produce Bitcoin. Um, but Bitcoin and Ethereum, those two currencies are the way place they are at because they're so big now. People want it because it's basically like a fiat currency, right? Even though the US dollar, we can't exchange it for gold, but so many people use it that it's inherently worthwhile to have it, right? But I would say the most thing I'm worried about for crypto specifically is that it is the currency of choice for illegal stuff, right? So either doing drugs or black black market is the currency of choice because it's untraceable, well, technically untraceable. I think you can still trace it based on wallets or whatever, but it's harder to trace and it's easier to you don't have to do some really conversion stuff. I can just say, oh, I can give you 0.25 of Bitcoin, and it's the same around the world as compared to, oh, I want to give you $1, but then I got to convert to this currency and then give it to you. Like, it's too much middle between stuff, but Bitcoin's really straightforward, right? So that's my main issue, which is, illegal activities, but also mining Bitcoin is a huge power sink. Like, you're putting so much power into a digital coin, which literally, that digital coin gonna save a starving child? No, right? Like, it's a digital coin. You just put so much energy into something that's inherently useless, right? That's my two main issues, I would say.
Yeah, I think I would like echo these points maybe from my some of the other perspectives. I think for me, I actually treat Bitcoin right now as more of like a store of value or like a little bit of an investment where you can like sometimes grow, capitalize on maybe some of the resistance and support levels that are seen with some of the stock trading charts because of Bitcoin's like super high volatility. And I think the basic thing about crypto that is driving its price so high right now is there's two things. So there's FOMO, obviously, like everyone's been looking at these different price increases, say, oh, I can get 10% a day. Oh, I can get 7% a day. And they're like, why did I miss out on that? And suddenly they want to buy in and try to get some of those gains, but then sometimes they don't know how to sell, and then all of a sudden it's a pump and dump, and all of a sudden they start losing money. So I think it's definitely more stable with Bitcoin and Ethereum compared to some of the other like super pump and dumps, like some of these scams like that some of your favorite content creators have probably been involved in. Aisha Speed was involved in a crypto scam a few years ago. I think the Hawk Tuah girl tried to start their own cryptocurrency and ended up being a pump and dump, and now she's facing a ton of lawsuits because of that. And obviously, she's kind of in a shitty situation right now, but we'll see what happens. But the risk with crypto is like super high, and a lot of people get drawn into a lot of short-term traders get drawn into these like price movements saying, oh, that's up 10%, that's up 9% a day. I gotta buy in and I gotta sell to make my profit. But sometimes they don't actually know when to make these transactions, and that ends up hurting their money in the long term. And also, as Zach said, a lot of policy support. Looks like the GOP currently could potentially see future with cryptocurrency. Although I do think that is like a little bit unusual or a little bit like weird considering like what people think of it. So I think like Bitcoin is like at least for the past 2 months or so with all the geopolitical uncertainty has kind of played like the gold role, which is like gold is often known to be something to be a commodity that is like people invest in it to hedge against like the volatility with some of the exchange rates and with the US dollar. But cryptocurrency in itself is probably more volatile than these price movements with like some of the exchange rates. So I kind of don't understand how crypto could be used as maybe like a hedging mechanism against these big price movements within the exchange rate. So that is definitely something interesting to watch in the future. And I think the geopolitical instability combined with everybody saying, oh, I got to buy in because it's up 10% a day and then it's yo-yoing down to 5% a day and that's back up 10% a day. Like the FOMO is pretty ridiculous with a lot of things and currency is definitely one of them. But I personally have a few crypto ETFs that I thankfully bought at a good price. But definitely you need to be on your toes. You need to be watching the markets every day. You be keeping in touch with all the currency price movements in order to be a successful investor in cryptocurrency. And unfortunately, more than 50% of people, I'd say even more than 75% of people are not like that. So definitely crypto is good if you want to go for a lot of like risk. And if you're a good short-term trader, you understand the resistance and support levels. But if you don't know what you're doing, you're kind of screwed. So that's kind of my take on cryptocurrency. And I guess maybe another follow-up question. We talked a little bit about Ethereum and some of the other cryptocurrencies, Solana and Tether are also rising. Could they be better investments or with higher growth potential than Bitcoin right now? Zach, you're kind of cutting off.
You gotta like scream into your laptop, bro.
It's not working. Hello?
Oh yeah, now
Oh,
that
yeah, we
was
can hear
working.
you. We
Yeah.
can hear you.
Okay, I don't know if I'm just lagging or not. That's my fault. So I guess I'll take it. I will say, like, I don't really understand this is just maybe you'll know, Jack, but what's the difference between Bitcoin, like Ethereum, and Solana? I know Tether has some sort of backing because it's considered a stable coin. But like between cryptocurrencies, what's the point in the differences of the names? Like it's all the same. And also, I was going to kind of respond to what you said about hedging. Wouldn't it be better to hedge with an actual commodity that is useful in real world, like oil or like gold and silver and different things? Things that are actually useful in day-to-day life, not cryptocurrency. Like you can't actually do anything with a fake coin.
Well, I guess like I was kind of thinking about it. Like a lot of people are trying to adapt. Like I think a lot of systems are trying to adapt Bitcoin as like a transactional system. And first, obviously, like Ivan talked about like the risk with a lot of like illegal stuff. And honestly, like thinking about that. Like a lot of I feel like I associate crypto transactions with more of like something like shady or like something more like on the black market. But like some platforms like I think Coinbase is doing this. I think Robinhood is also looking to expand into this. But they're actually starting to use crypto as a potentially like transaction mechanism, which I find is like pretty interesting. And I think something else about like I guess like Bitcoin that I'm like really uncomfortable with as a transactional system is like I don't like working with decimals. And I don't think a lot of other people like working with decimals either. So like if you want to like make a transaction with Bitcoin and you want to pay like 0.05 Bitcoin, that's like a little bit of an awkward number to work with, especially if you can't do mental math on the spot. And I'm not that type of person. I'm pretty sure like 95% of the people around the world aren't that type of person either. So I think Bitcoin is the only one that I know of that is gaining some sort of traction in terms of like a transactional mechanism. But other than that, I think I would echo the other Ivan and Zach's points that it's like it's kind of more of like a store of value right now, where it's just people like oh they're treating it as like a commodity. They're just like riding the hype, riding the price increases, or I I I really am looking forward to see like what cryptocurrency could potentially be in terms of like can it be used in transactional systems in the future?
I I just want to like butt in because I think like the point, like the purpose of investing, period, like regardless of what are you investing on, is I think the main goal. I don't know if it's the same for everyone, but for at least for me, if I'm gonna invest, the main goal is to because inflation is intrinsic, right? Like you're always gonna be inflation, whether that's 3% or 10% or 15%, it's always gonna be there. It's very rare gonna have deflationary periods. But it's just protect my personal money and protect what I own from losing value, right? Because inflation, you lose value. So I think the basic definition of investing is to protect against the loss of value. Um, but I think with the cryptocurrency is like kind of opposite. Like you like when you're doing crypto, you're kind of ignoring like I'm like all in or like dead, right? Like I either put all my investments into this one cryptocurrency and hope it shoots to the moon, but not necessarily like what I have. I just don't want to lose value. Maybe earn value later on, right? Sell it for a higher value, but I just mainly don't want to lose value. But for crypto, it's mainly because it doesn't have any value. I'm buying in just hoping I earn money, right? I think that just it's such a different game as opposed to traditional investing that you know I think for the people who are doing crypto, the riskier the better, right? So Ethereum is inherently more risky than Bitcoin because Bitcoin has a hard cap with like 20 something billion coins, but Ethereum does not have that. And then Solana also, I believe, does not have that. So it has a like even though like Ethereum is very expensive now, but it has a potential in the future to become like any other cryptocurrency because it has a potential for the supply to just shoot up, right? Um, so I think because these are so inherently risky, that people who already do crypto and want to get into crypto, they get incentivized to join in the market. So I think if you're not that type of person, it's really not worth joining because everybody who's there likes the risk. But if you want to simply protect the value of your properties, of your current cash on hand, I don't think it's worth it.
Yeah, that's true. I think Ivan, you're also getting into like a point when you say you're trying to protect your money from inflation in terms of investing. I think just people want to just like make more money off of that and they can have like more spending power in the future, and this is why they want to like invest. I think the angle you take is from more of a long-term investor's perspective, and I think all three of us are more long-term investors than short-term traders. But I've also, interestingly, I've actually been diving in a little bit to more of like the short-term trading. Found some Discord servers that do like a lot of short-term trading and doing like alerts and everything. This is very uncharacteristic from me for a lot of people who know me, but been diving in, making been like trading some of the alerts that they give me. Don't worry, I'm positive on all my trades. I have lost money on my trades, but overall I'm a net positive on all the short-term trades I've made. So I think I deserve a round of applause there. But anyway, just in the past month that I've seen, like I've only had the trial period for like a month, and I'm only gonna have it for a month. It's like there's a lot of like companies that are kind of riding the hype as well. Like of course, MicroStrategy, the CEO Michael Saylor is a big proponent of Bitcoin, but I'm in my time like trading, like obviously I've not been focusing on MicroStrategy because they're already an established company. But also like there are a lot of companies that suddenly converted all their like funds to like Ethereum or Bitcoin and suddenly started becoming pumping up stocks. I think two examples is Sharp Link Gaming, which went from $6.80 to like $80 in like 2 days, and then went back down to like $11 now, which is like pretty crazy. And then more of a recent example, which is BMNR, I think that's the ticker. Bitmine, I think it's called Bitmine Immersion Technology, went from $4.30 to $66 in like 2 days. And I bet that thing's gonna go all the way down to like maybe like $6 or $7. But th there's a lot of like people like really like riding the hype, and like if you don't get in at the right time, you're kind of screwed. That's all I'll say. And I think that if people want to like ride the hype, they actually understand how to do short-term trading, maybe some of the patterns. I still don't understand the patterns. I'm a short-term trader. But anyways,
Wait,
if you kind of
sorry,
like
sorry to interrupt, but the more you talk about this, the more I think about just straight gambling, right? Because when you're like doing poker or blackjack or like simple even roulette, like you're like, oh, this table's hot. Like people are winning here. I'm gonna join in, right? How is that different from crypto, right? Crypto is basically like, oh, this thing's going hot. Let me join in, hoping for that little spike. But when you join in, obviously it's all luck based, right? There's a difference. Like crypto is kind of based on inherent properties of like supply and demand, right? Ultimately, it comes down to that. But for gambling, it's like purely chance. But I feel like the mentality is the exact same. So, what do you guys think? Can you guys like tell me is there a difference or not? What do you guys think?
Um, Here, wait, can I jump in really quick? Yeah. I think that here's my point of view as someone who's like this summer been working at a wealth management firm, and some of the financial advisors are kind of looking at maybe adding cryptocurrency to portfolios. I don't think it hurts to have it there. because like you said, Ivan, it could like it's kind of luck based, right? You either see it at the right time and it shoots up, and then you take your money out, and like then you're good, or you're losing a bunch of money. But I think that it doesn't hurt to like diversify your portfolio into something like that. Like I think further diversifying your portfolio is always a good thing. Almost always. I mean, obviously lower returns and whatnot, but I think in the terms of a wealth management view, I think that it's always important to diversify your portfolio. So like that could be a reason why someone want to do it. Or you could be like Jack and just like be in it for a second and then make like $400 in a in a second and then just jump out. Like you could be in and out and be like actually watching it and look for patterns. I feel like because in blackjack there's you can count cards, right? You could count cards if you wanted to, but I wouldn't. There's not necessarily patterns, right? It's still luck based, like you said. But in supply and demand, there is patterns. Like people are going to react a certain way to the price dropping, and people are going to react a certain way to the price increasing. I'd be interested to hear what you think, Jack.
I mean, I'm not that good of a short-term trader, but I will say I'm still positive. But I think for me, I'm trying to get back more into like the long-term lens. So I'm only looking at Bitcoin and Ethereum right now. I'm looking at potentially some of their growth potentials and maybe see if I can diversify my portfolio with those. But for like some of these like other cryptocurrencies and for I guess some of the the companies that became pump and dumps because of the fact that they turned so many of the reserves into cryptocurrency. Like you need to be like watching the markets like every day. You need to be like looking at the patterns and hopefully hopefully they pay off. So I would say it is like probably it's actually really close to a gamble when you think about it in that way. If you like look at maybe not as many of the established names, like what the hell is Sharplink Gaming? I didn't know about that until I found out they converted their reserves into Ethereum or Bitcoin or something. So I think when you're investing in something you don't really know about, of course that's kind of a gamble, and you're kind of like hoping people pay off. Maybe you get some tips from maybe some analysts at Goldman Sachs or whatever. You see the market beat and they say, oh, they raise their price target or something. Maybe that could be something. But if you really don't know what you're doing, if you don't understand what the drivers are, I would assume that you're pretty much gambling, especially with any high risk investment. Even for investing normally, if you don't know what the hell they're doing, you're just buying it because people are telling you to buy it, you're gambling on the fact that your friend is right or something. And that's like how I think of it. Also, like Ivan, you mentioned Dogecoin like earlier. Like what the hell happened to meme coins, like NFTs? Like I feel like they've like kind of descended into irrelevance.
I'm a since I'm a Dogecoin investor, I'm gonna start off. um, Honestly, I think it's still a thing, genuinely. But it's just like not that popular anymore because I think people are not stuck in front of the computer all day, every day, like during the pandemic. Like the only reason why I got into like Dogecoin and even business in general is because I was sitting in front of my computer and a news article. Well, no, I'm scrolling Reddit and I see this because like they sometimes Reddit pushes like subreddits that are doing like really popular, and it's like Wall Street bets, and then this guy like wins big on AMC, right? Like the one reason why I get in. Like I see news article about AMC and I jump in on GameStop and I jump in on whatever that Reddit is going to talk about. But school happened, right? Like I gotta go back to school. I'm not being able to monitor Reddit while I'm at on like if I'm on Zoom, I can just have Reddit on my other monitor and be like, oh, somebody's buying this or they're doing this now, whatever, right? But at school, you gotta do school. People gotta work, right? And so I think it's just with especially with these like meme coins and like meme stocks or whatever, it's based on the fact that there's so many people doing the same thing at the same time, right? But when you're at work physically, at school physically, you can't make people do like maybe you still have the same amount of interest, but people are not available at the same exact time. unlike during the pandemic where everyone's sitting in front of the computer regardless of what was happening, right? So people were able to buy in and sell at the exact or similar time frames and just tanking or boosting a meme stock or a meme coin, right? But I think it's still a thing though, like especially with like the Trump coin or whatever, and like NFTs. But I think it's just really, oh, also the fact that like so many of these have turned into pump and dumps. People just like lost faith in them. Like every time I see something growing in popularity, it's gonna be a pump and dump. It's gonna be a rug pull. Like every single time. Like tell me a time where something got super popular super quickly and that was not a rug pull. So yeah, that's my 2 cents.
I don't know if I'm supposed to speak into this, but I totally agree with what Ivan said. I think, I mean, that's just how they tend to roll now. So I guess they just don't. People, I was going to say people lost faith in the idea of like a startup coin. Yeah, I think because there's been so many startup coins that it doesn't make sense now. Like why choose that coin over another coin? You know.
And I
They're
guess
all
also
worth
like
five
just to
cents.
add, I guess just to add my like 10 cents, I guess. I think crypto has like just in general become more mainstream, which means that like some of the other options are just more reliable and just better options to invest in instead of gambling your money on like maybe a Dogecoin or a Shiba coin. My family looked at Shiba coin because I actually have a pet Shiba at my house. He's not gonna pop up to my lap unlike what he did in what Ivan's cat did to Ivan in the last episode. But I have a Shiba. That's the point. And my parents looked into getting Shiba coin just for fun. But honestly, like I haven't heard too much about Shiba Coin. I haven't heard too much about Dogecoin. Most of the ones I have heard of are just like been pump and dumps and just getting people exposing crypto scams and everything. And I think more people are just like realizing, oh, just put your money into Bitcoin, just put your money into Ethereum. No, none of this like Dogecoin, none of this meme coin like shit and everything. Also, NFTs have just completely descended from relevance. Like have not heard of NFT in like 4 years, which is honestly crazy, but like I kind of understand they're not really useful. I don't think they're pretty useful at all.
I mean, it's just like inherent economics, right? Like, there's nothing preventing someone from duplicating an NFT. Like, I can just take a screenshot, and then now the money's like the supply is infinite, so the price just takes, right?
Yeah, it's true. Also, like you can just literally do an NFT of anything. Like you can take a picture of the water bottle in your room and sell it as a $2 NFT. What's the demand there? Like, there's not going to be any like sort of demand. You're not creating anything symbolic, or
I
let's be real,
think
it's just a picture of a water
NFTs,
bottle trying to sell for money.
yeah, I think NFTs is just everything that's bad about crypto, but just that. You know, nothing good about crypto, just everything bad, just concentrated into one thing.
I feel like it's like wanting a picture book, except the price changes. Like if you actually get like a physical photo from like some like memorabilia thing, like that value is good. That value, if it's like actually like a decent like item and could grow over time as history like goes on, that item might actually like grow in value. But if it's just like something useless like most NFTs are, like that shit's gonna tank. Let's be honest. Like it's not worth it. And probably you could come up with something the same time. Now ChatGPT exists, like that you can like ask them to create like a similar photo and you can just like save it for yourself. Like I feel like there's so many things that have overlap and like NFTs that like slowly like bloop, it's not there anymore. So, I guess like we've talked enough about crypto. I think we all have our perspectives on it. I think our perspectives like kind of align a little bit closer to like maybe like others podcasts that analyze crypto as we think it's more like risky and we're we're personally more we don't we our tolerance in general isn't as high as some of the other like people that we see are crypto advocates or something like that. So, I think those are like I guess like 20 cents on crypto. But I think now it's a good time to also transition into something else that is potentially more exciting and which are stablecoins. And honestly, I'm not the best person to give a definition of stablecoins, so I'm actually gonna let Zach do the job. He seems to be an expert in stablecoins, so let's give him the honor.
Wait,
And Broski's coming up,
my
coming out again.
scared
Yeah,
my
like
audio is not gonna work anymore. I
I
wouldn't
didn't
say
agree
that.
here. Well,
Okay.
Still cutting out.
Am I cutting out still?
Now it's better. Now it's better.
Okay. All right. I'm like yelling. All right. Um, it's because I don't have my microphone. I'm just using my laptop. I don't. I wouldn't say that I'm an expert on stablecoin, but from the way that I understand it, stablecoin it kind of takes a cryptocurrency and what's good about it, and then gives it a backing. So, like, there's different types of stablecoins. There's USDC and USDT. Um, so USDC is the newest one. It's called Circle, and it just IPO'd a couple months ago. And USDT is Tether, which is a different uh, coin, I guess. Um, but a stablecoin, really, what it is it takes treasury, like treasury, U.S. Treasury bonds, and makes it so that you can take your money out even faster. Um, so really, it's kind of like I would say that the way that I conceptualize it is it's kind of like a bank where you can, except the bank is like holding treasury bonds. It just kind of gives some sort of worth to a coin and like something that you can actually take out your money and then put it into US actual like stock or US bonds. Um, and it feels more like an actual company with revenue because they're investing the money, right? They're getting treasury bonds and they're taking that interest and they're making money, whereas like a stable coin is just all purely economics. Um, so it's like closer to like a company, I would say, in between a company like buying a stock in a company where you actually have like a say in the company and what's going on in the company, and a cryptocurrency where it's literally just based off how many people want to buy and sell today. I think that it gives it a little bit more security and it's something that could be applied into like real world scenarios with Coinbase and like credit cards and stuff like that because there's some sort of security to it.
Yeah, absolutely agree with that. I don't think I would have been able to explain that better than Zach did, but I think I could maybe give a few ideas of maybe how I think about stablecoins. So I think stablecoin is just in general like it's more of like a less it's basically less volatile than crypto in the way that it's like kind of like fixed to like whatever fiat money is like that is tied to. And so for the people that don't know what fiat money is, I think uh so fiat money is basically some sort of thing that is it's like the value of fiat money or any sort of fiat money is kind of like derived by public trust and like and confidence in whoever's like issuing it. In the case of the US is the US government and like the fiat money I guess like what I could compare it to something that is not fiat money is not like the commodities that you think of, so it's not like gold or silver or something. So in this way, stable coins are tied with like a set of fiat money, and I guess like the USDT and USDC they're tied to the US dollar. So it's maybe I think the current conversion rate is one stable coin to one US dollar. Please correct me if I'm wrong, but I hope I sincerely hope that's right. I guess maybe I could also talk a little bit more about maybe the differences between USDT and USDC. So of course, Zach mentioned that USDT was by Tether and USDC was by Circle, which also has a big collaboration with Coinbase. I think there was I think there was some filing that kind of like showed that maybe Coinbase actually took a large percentage of Circle's revenue, which I thought was like really interesting. And then all of a sudden, Coinbase started going up after people realized that, oh, Coinbase is actually going to benefit huge off of whatever Circle's getting. So, and then back to the discussion about maybe the differences between USDT and USDC. So USDC, which is the one backed by Circle and Coinbase, is kind of like regulated like a bank. The US Fed, the US government really supports it, and they were trying to actually pass some legislation. I think they've already passed legislation it's called the Genius Act. I think Zach would probably be a better person than me to explain it, but they're kind of using the Genius Act and like its publicity to promote it. But on the other hand, USDT is through Tether, and it's not backed by US securities. And I think the main reason why people maybe look more towards USDC instead of USDT is that it's not as transparent. Like not many people know too much about like the reserves and everything compared to USDC, which is like super transparent. It's already cooperating with government regulations and everything. So I think those are the two like major differences between the two stablecoins. Now I'm gonna pass it back to Zach to kind of explain what the Genius Act kind of did.
So the Genius Act is something that's passed by the Senate not too long ago. It kind of like went hand in hand with Circle's IPO. If I'm not wrong, I feel like it was a
It was
bit
like two
like
weeks
just a
ago, I
bit after.
think.
Yeah, it was something. It was like it coincided with it, but some of the key provisions are that they have to have a one-to-one reserve requirement, USD or treasuries only. So pretty much I would say the best way to conceptualize it is that it takes a stable coin and then turns it into somewhat of a bank. And it gives it the security of the US government behind it. So essentially what you're doing is when you buy stablecoin, you're buying US treasuries. But the main difference is that when you buy a treasury, you have a fixed income where it's over a long period of time. So like 10-year, 20-year, like 5-year, 2-year, whatever. There's like a fixed time that you have to hold it for because, well, you're loaning the US government that money. In this, in with a stable coin, you can use it as if it's like a credit card or a debit card, and you can trade it back in for USD or treasuries or go back into stablecoin and whatnot. Um, and it also just some other things that have made it that the Genius Act how it impacted stablecoins is it made it so that they have to have real time public disclosures of what's going on and what's going on throughout the actual stablecoin. And it applies full AML and KYC standards, which is anti money laundering and know your client standards. So that really just means it's just all this is just to protect the stablecoin. It also has Federal Reserve oversight for the issuers greater than 10 billion. So that just means that um, it again it's backed by the Federal Reserve for people that are big enough, and, and it it gives it more security because it's backed by the reserve and there's oversight there. Um, some impacts that it's going to have, it's going to put pressure on Tether because they have to follow these restrictions and they weren't before. And then we also might just see like uh, interesting stable coins come out. Like you could see um, like a Bank of America coin or like a JP Morgan coin, Goldman Sachs coin, like different banks you could see come out with their own coins because, well, it's a new product they could sell it to people, and it might be useful marketing for them.
Yeah, definitely agree with the last part where you said, oh, some of the biggest banks that we know, Bank of America, Citibank, Goldman Sachs, they could possibly release a lot of their own stablecoins, like they want to put their hat in the mix and everything. And honestly, I'm also been following a company that produces a stablecoin. I don't remember what it's called, but I think it's called Cantor Equity Partners or something. I don't know exactly what call I don't exactly remember what stablecoin they developed, but I'm kind of gambling on the fact that their whatever stablecoin is gonna get regulated soon. And honestly, it is a bit of a gamble on my part, I will say. But I think I think there's like a big like regulation component with stablecoins, and also uh, I guess we haven't really talked too much about like the economic impact. I guess I could summarize it a little bit in like simple terms because honestly, when we were researching a little bit about like stablecoins and how they're kind of related to economy, we were pretty puzzled actually for quite a while, and we kind of like logicked it out a little bit before we started actually recording. So basically, since Zach talked about like how stablecoins kind of like make a little bit of money, they're also like a banking system, but stablecoins are starting to become stablecoin providers are starting to become one of the biggest buyers of U.S. treasuries. And I think this kind of goes back to our, I guess, high school days AP macroeconomics knowledge. But if the U.S. government or whoever's controlling the money supply, I think that's Fed, the U.S. government or the Fed, if they sell treasury bonds to stablecoin providers, that actually leads to more of a money supply contraction, and that is honestly something that a lot of people are worried about. And I searched this up on Google, and they said I think in easy terms, money supply contraction like comes from the fact that stablecoin issuers are heavily investing into U.S. Treasury bills and bonds, and that is the primary way of making money. And that ends up taking out of what we know today is a fractional reserve system and kind of limits how much money supply can be expanded. And hopefully that was clear enough for the audience. If not, please let us know. We'll try to explain better next time. But I think to move on to maybe a topic we're more inclined to talk about, or it's easier for us to talk about, is the company Circle. And they had a recent IPO, I think it was 2 weeks ago in mid-June, and they were priced at $31 per share. It surged to $298 per share I think 4 or 5 days ago, and now it's correcting all the way towards $177 today. So I think this is a question more for Zach because he's a wealth management intern and he knows we're both going into finance. So I guess like what do we think is Circle's like intrinsic value? Like what price would you consider buying Circle at?
Wait, it's not. I would say that Circle, I mean, obviously you could look at the company, like they probably have streams of revenue and this, you could probably do an analysis on it, kind of like a bank because of this new Genius Act stuff. Um, but I will say that I don't know I think the price is going to drop. I feel like when you see sell side say that the price is going to drop, then it probably means the price is actually going to drop because there's bias there on sell side. Um, so I think the price is probably I would maybe buy it at $70 a share, $80 a share. I think that is still riding off the IPO and like, oh, this is a new thing. I don't think there's a large economic moat for a stable coin. Like anyone can start up their own stable coin. We're gonna see banks do it. We're gonna see um, a lot of new entrants to the sector, to the industry. Um, so I really don't think that the price is justified right now. The expectations are just too low, or they're too high for what it actually should be. Um, I'd like to hear your take on it though, Jack.
Yeah, for sure. Before that, would I would like to talk a little bit
Oh yeah.
about what he thinks?
Yeah, I'm like, I don't think much of what I'll say is, because you two are really interested. Like, this is your day to day, but I've learned about Circle literally like last time we talked. So, um, but what my take is, because I'm someone who's more interested in like macroeconomics, right? Economics and the social factors. But my take in why stablecoin could be good for a regular consumer, right? Like realistically, like right now, from what I'm hearing and from what research is that people are hyped about stablecoin because it's a new thing, right? And people are hyped not because stablecoin is useful, but because it's a new thing, right? But in the long run, when everything is calmed down a little bit, and then now we're actually talking about the uses of stablecoin. What I found is that stablecoin is kind of like a bank, but a bank that runs 24/7. So let's say you're in France or opposite side of the earth, and you're like, oh, I'm really low on cash. I can immediately spend my stablecoin in return for cash, regardless of if the bank is open or not, if the bank has an ATM or not, right? I can instantly get USD on my phone or whatever, and then change it to whatever currency I'm in, regardless of who's working, what's open, what's closed, who's here, who's there, right? So I think that's the main thing about stablecoin in the long run is that it's a stable coin, right? It's worth a dollar or whatever it's worth it at, and it's always going to be that way, but you can access it whenever you want, wherever you want. As compared to a bank, I can't access my money. I have to go to an ATM or go to a bank. Like if I have a Bank of America, I'm not they're not going to have like an ATM in Japan. It's going to be very rare. I have to like actually physically find. But if I'm in Japan, I can immediately change a stable coin into one US dollar and then convert it to the Japanese yen, right? So that's the only way that stablecoin is going to be useful for a day-to-day consumer. And that being said, as of right now, what I think is Circle is riding off of that hype. But once everything calms down and people actually use stablecoin as it is, it's just a bank at the end of the day. A bank that runs 24/7, and it's not going to protect against inflation, obviously, because it's one-to-one pegged. Like if you're interested in earning money, like protecting your investments or potentially earning money, stablecoin is not for you, because stablecoin is a way to easily spend money, and that I think is a good thing for actually I think that's why the government's pushing it so much, because that's a good thing. It only, like, right now probably not, because as Jack said, they're actively contracting the money supply. But in the future, people who use stablecoin are actively going to drive demand, because stablecoin, I can use it wherever you want. So I can potentially increase money supply as well, right? So I think in the future, that's why the government's so focused. That's what the Fed and whatever, they're so focused on stablecoin, because the future is very promising for the government, for society. But as a consumer, I don't think it's really worth investing in like stablecoin companies like Circle, because simply that's all hype, like Tesla or whatever. That's all like people hyping it up, but it's not, the actual stuff isn't there. But if you're like a person who travels a lot or does work wherever, or you're going on a worldwide trip, stablecoin is something worth getting, because you don't know what predicament you're going to get yourself into, and stablecoin could help you in that state, but not necessarily as an investment.
Wait, did bro say Tesla? No, I'm kidding. Well, okay, well, our resident economist here gave a pretty excellent explanation of how stablecoins work, more on like the economic work. That probably an explanation I could not have given you on the spot. So big credit to Ivan there. I guess I'll answer more of like that equity research perspective, where I think the intrinsic value is. When it IPO'd, it was intrinsic value is 31. So obviously there's been a lot of big developments since then that I think has increased the intrinsic value pretty drastically. But I'm still gonna, I don't know if this is a very conservative estimate, but I would price Circle anywhere between $80 to $100. And I think some of the analysts have been, when they've looked at the price, they've priced it at the lower end of my range. So I think Goldman Sachs actually released a report like a day or two ago, and they said I think their price target was around like $83 or something. And honestly, of course, being a leader in the current stablecoin market and having that allegiance with Coinbase definitely helps with a lot of the valuation. And the fact that USDC is the only stablecoin right now that is backed by the government, is backed by the Genius Act, that's like a big thing that's riding its value. But also just the fact that like Circle ran all the way to like 102 like on the first day before taking down like 86, and then over the next few days ran all the way to $298, which is honestly crazy. And as someone who actually bought in on the first day and made some money on Circle, I'm kind of proud of that, but I was also punching myself because I thought I sold it too early. I thought the moment it reached like 298, the day before, there were analysts, I don't remember which bank they work at, but they did their research and they issued a 10-year price target at 300. And just to think that it almost reached that 10-year target by the next day was pretty insane to me. And honestly, by the time I knew that it was approaching 300, I knew there was going to be a dump coming. Like people are going to do profit taking because they know Circle is absolutely nowhere near that intrinsic value or near that value at all. Like it priced at $31 per share, which is probably extremely close to what the company thinks is their intrinsic value. And just have you seen the PE ratio with like Circle? Like I think it was like 2,500 or something, or even more than that. Like it was absolutely insane. And of course, like over the past past year, we've seen companies with huge P ratios that kind of like defy like the logic saying, oh, this P ratio is so high. Why is the stock going up? I'm talking about Palantir. You're probably thinking about that. But like Circle is so insane. I think their P ratio is still absolutely stacked, which is definitely a sign that it is overvalued. So I would personally price it around like the 80 to 100 range just because of such the positive developments on there. But also be careful when you're riding the hype. Circle is just 2 weeks in to I think is it like the 90-day IPO period where there's a lot of um changes in prices and then somehow after the 90 days it's kind of like close to maybe closer to their intrinsic valuation. I don't know. We're only like 2 weeks into that. Definitely something to look forward to in the future about Circle though. But I think we kind of discussed already, like, oh, maybe the future of stablecoins. We know that some of the big banks are kind of the players, but I think I think I think both of you can, and I think me as well at the end. I think it would be helpful for the audience for both of you guys to, I think, give like a quick summary of, I think, where you guys think the future of Bitcoin and, I mean, cryptocurrency and stablecoins are going to go within maybe like the next like few years, maybe next 5 or 10 years before we wrap it up here. So maybe like give like maybe like a few thoughts from each of you before we go.
I guess, well, while Zach is being actively suppressed by Zoom, I would say like as someone who's, my long term, I have a long way to go career wise, so I'm gonna be more conservative, right? Um, because if I spend all my money now, then I don't got money later on to spend on my education or to live, right? Because I'm gonna be working minimum wage for at least like 10 years of my life. Um, so I'm a little more conservative. So what I would say for like conservative or stablecoin is, at least for someone who's a little bit more on the conservative side of money, like my interests are not necessarily like earning a buttload of money, but more so protecting my current income, or not income, like my current bank account number. Like I don't want it to go down. Hopefully it can go up, but I don't want to go down mainly. And then all my property, like all my family property or whatever, right? I don't want those numbers to go down. My goal is to keep them as is or go up a little bit, not like become a billionaire overnight. That's not my goal. So as a person who is more conservative, I would say it's not worth it. Because cryptocurrency specifically is inherently based on risk. Cryptocurrency is so popular today because of this risk. And as I was saying regarding gambling, it's that so cryptocurrency has kind of become this deranged thing of literally gambling. Like it's a gambling with a hint of statistics and like behavioral economics. Um, because like it's, even if you can predict behavior, you just can't predict when it's gonna happen. Like I know people are gonna buy them, just don't know if it's gonna be the next minute or the next hour. Right? I know it's gonna happen, just don't know when. And I think that's what a lot of crypto is happening right now, and it's really that short term gain like you guys are going for, like even wealth management or whatever. I don't think for it's gonna apply to wealth management either, because none of the cryptocurrency most of the cryptocurrency are not growing at a steady value to protect against inflation. Like maybe Bitcoin and Ethereum qualify like as good long-term investments, but really I don't even think you can classify crypto as an investment, because it's literally you buy in and then immediately sell out. Like you see the sub jump and I sell, like buy and sell, like within a couple seconds or a couple minutes. Right? I don't even think you can classify that as an investment. That's literally gambling, in my opinion. Like a gambling, like blackjack. Like I can count cards, but at the end, it's still probability of chance, right? Like I can increase my chances of winning, but it's not going to be 100%. It's going to be like 50% or 40%, right? At the end of the day. So it's like, as someone who's conservative, as someone who is going back to the basics of investing, which is protecting your money against inflation, it's not worth it.
To agree. I mean, it's not worth it. I think, I think that, yeah, it's super volatile and the cryptocurrency doesn't make sense. I think stablecoin is a good start. um, to a problem that is cryptocurrency because like what happens when Bitcoin is all mined up and it's there's only a certain amount of Bitcoin. Like there's a fixed amount. Like what happens when that comes? And that's like Ivan said, they're making it harder for people to mine it because I think that they know that it's hard. It's going to be a difficult um, um, time when there's no more Bitcoin to mine, you know. Um, but I think that uh, stablecoin is a good way to kind of maybe start looking at a future where we can use some sort of like digital currency like that and have some sort of value tied to it. Um, I think that personally, I would never put my money into it because I think that at the end of the day, what drives value is it's shareholders, right? It's giving money back to shareholders. I think that with a stablecoin company, I don't really know how they could give back um to shareholders. Like you can't give dividends. I mean, maybe they can give dividends. I don't really know. It's such a new thing. I probably would have to do a lot more research on it before I could make an investment decision on it. Um, but yeah, I think that's kind of the future of stablecoin. I think it's going to grow um, because I think it's going to benefit the government. And if all stablecoins are in the US, USD, if they're all in USD, then that gives more power to the USD over currencies because everyone has to convert to it, you know. Um, so that could be interesting. But
Yeah, I think I definitely agree with Zach that I think that the USD or like whatever cryptocurrency is like linked to the US dollar, they kind of fit the goals of the current administration in terms of that, oh, they want to keep the US dollar as the dominant currency in the world. And that is, of course, something that President Trump is championing around the world in spite of debates of people saying, oh, the US dollar might be taken over with something else. But that is like the goal of stablecoins. And that is why President Trump and his administration has been so, I guess, adamant about, oh, the future of stablecoins is super, super, super bright. And this is why you need to invest, maybe get some stablecoins for yourself. And I think the future of stablecoins is definitely like more of like very bright. I think also, I think also as like maybe I'm more risk tolerance as an investor, I'm more risk tolerant than Ivan is. I do see a future that I think Bitcoin or Ethereum could potentially continue growing in value, and that also is, I think, especially that comes once those two currencies can be integrated into I guess like traditional like buying or selling. Like if you want to buy like a product or like sell a product for a certain amount of Bitcoins, you want to gain Bitcoin off of that. I think this will definitely determine like the value of potentially the more well-known currencies. More well-known cryptocurrencies when I mean like Bitcoin, Ethereum. And I think the meme coins will honestly die down even more because of how relevant some of the bigger and more useful cryptocurrencies have gotten. And so I think that's just my take as a more risk tolerant investor. And I currently hold a ETF. I wouldn't go for a full Bitcoin or full Ethereum because that would actually take up a majority of my portfolio, and I don't want that much of my portfolio to put in that much risk. So in my opinion, like I'm more risk tolerant, so I would probably go for maybe some like ETFs. If you buy in at the right price, of course you have to watch all the volatility and everything and watch the big news. But as a more risk tolerant, like at the end of the day, the audience, like if you're more risk tolerant, you're more risk averse, you gotta, I guess like if you want to buy, you gotta make a decision on whether you want to buy in. Like the price could change like 10% each day. It could go up 10%, drop 5%, go up, it's kind of yo-yoing around like certain prices, and sometimes they trend upwards, sometimes they trend downwards. So if you're like an audience like member like watching this and you're actually interested, you have to find you have to be lucky enough to find the right price point. And of course, like don't go all in. That's like I think that's what everyone would say about cryptocurrency, no matter if it's a more established one like Bitcoin or Ethereum or something like Dogecoin. Like never ever go all in. I think that is something that I think all three of us would say, no matter how risk averse or risk tolerant we are. I think out of the three of us, I'm probably kind of proven in this episode to be the most risk tolerant out of the three. But but anyway, I think that is a good way to wrap up this episode about cryptocurrency and stablecoins. Of course, I think this this episode was probably shorter than some of our past episodes. We're trying to do a better job of controlling our episode's length. And so I think we'll look forward to seeing you guys on the next episode. We haven't determined the host yet, so I guess that'll be a surprise for everybody, but we hope to get this one released as soon as possible while cryptocurrency and stablecoin are still extremely, extremely relevant. And so thank you for tuning in. I'm your host, Jack. We'll see you on the next episode.